Hello guys, and welcome to my channel. In this video, we'll be talking about FTX. And you have got to watch this video till the end to get every step-by-step detail you need to know about the collapse of the giant FTX and its repercussion in the crypto world. Are you ready for this? Alright, let's start. FTX collapse has become the most recent and largest crypto scam in history. The question is, how and why did it happen? He was compared to Warren Buffett. He was the great savior of the crypto world, but now he is its great villain. This is the story that has an entire industry on edge. The story match. Introverted founder, math lover, MIT grad? Yes. Surrounded by other MIT grads and ex-traders? Perfect. Was he disinterested in his fortune and more interested in making the world a better place? You cannot ask for more. Investors, large venture capital funds, the press, and especially cryptocurrency fans believe in this entrepreneur who always dressed in shorts and a t-shirt. Sam Bankman-Fried, or SBF, as he likes to call himself, surprised the world by building a company valued at $32 billion as of last January in less than 3 years. He came to the rescue of the industry in June when the problems of BlockFi and Voyager threatened to destabilize the industry. The main donor to the Democratic Party, Bankman-Fried, advocated until a couple of weeks ago in Washington on the need to regulate the cryptocurrency industry. In Florida, his company announced opening an office in an exclusive building in Miami. There was talk of the purchase of a bank and the constructions of a new JP Morgan, all based on cryptocurrencies and all from the Bahamas, where SBF established its residence a year ago. SBF asked for the bankruptcy of his empire this Friday. Alameda Research, the company that originated his fortune, FTX International and FTX US filed for Chapter 11 after a week that has put the future of the cryptocurrency industry in suspense. What's going on? What happened? Well, we can just jump to the answer without knowing the root of the company's failure. FTX is an exchange founded in 2019 and with corporate headquarters in the Bahamas, where retail and institutional traders can buy and sell crypto assets, leverage tokens, NFTs, futures, stocks, tokenized stocks, and fiat currency. In addition, the company also has its token, FTT. How was FTX born? In 2019, Sam Bankman-Fried, the company's co-founder and current CEO, traveled to Asia for a conference, where he was intrigued by the gap in Bitcoin prices that existed between Asia and Western exchanges, something later came to be known as the kimchi premium. A few days after landing, impressed by what he saw in the environment, he settled in an office, set his team to Alameda Research, another crypto trading firm founded by Bankman-Fried in 2017, and began building FTX, which by May 2019 was already on the market. Why is FTX a recognized exchange? By trading volume, FTX, according to references like CoinMarketCap, ranks among the 4 largest exchanges in the world. The figure of Sam Bankman-Fried has also contributed to his dose of publicity. The CEO of FTX is considered one of the crypto millionaires on the planet, with a personal wealth that before the crypto winter was estimated at $22.5 billion, one who has also signed the Giving Pledge. A public commitment is proposed to billionaire individuals and families in which they commit to donating the majority of their fortune to philanthropy, either during their lifetime or in their will. Support for altruistic causes is among FTX corporate policies. The exchange claims that it has donated more than $10 million to charity-wise. Through marketing alliances or shareholdings, the company has been linked to prominent figures in the sport such as tennis player Naomi Osaka, former basketball player Shaquille O'Neal, and quarterback Tom Brady. And recently, FTX collapsed and filed for bankruptcy. The recent bankruptcy of FTX, one of the biggest cryptocurrency exchange platforms, is as devastating to the blockchain industry as the 2008 collapse of Lehman Brothers was for the traditional financial markets. The difference between these two events is that in the case of FTX, there is no official entity or body that can come to the rescue. Only Binance, one of the largest cryptocurrency exchanges in the world, considering acquiring FTX, but after evaluating its accounts, ruled it out. FTX was about $8 billion behind. Causes of FTX bankruptcy. Everything indicates that the transfer of cash from FTX investors to Alameda Research, a different cryptocurrency management business controlled by Sam Bankman-Fried, the 30-year-old American who launched FTX in 2019, in May 2022 was the primary cause of this catastrophe. After this information was revealed, Binance declared at the beginning of November that it will sell its $529 million holding in FTX. Investors were alarmed by this, which led to a big sale of the FTX token known as FTT and severe liquidity issues for FTX. Following the announcement of FTX bankruptcy, the platform was compromised and investors started receiving letters saying their money was missing. Billion-dollar losses. The bankruptcy of FTX marks the fourth major loss in the world of cryptocurrencies in the last year, after the bankruptcies of Vault, Celsius, and Three Arrows Capital. The FTX price fell 77.34% between the beginning and the end of the sessions on November 8, 2022. In the crypto markets, the main cryptocurrencies by capitalization have seen huge falls and instability in their prices. Bitcoin had moved in a price range between $19,000 and $21,000 throughout the second half of 2022, which was progressively trading above $60,000 in 2021, fell below $16,000 since the FTX collapse. The same trend was followed by Ethereum, the second cryptocurrency by market capitalization, which went from almost $1,700 to barely $1,200 after the aforementioned bankruptcy. High instability. Has the FTX collapse caused instability in the cryptocurrency market, just as the Lehman Brothers bankruptcy destabilized traditional financial markets in 2008? Let's analyze the intraday volatility of different cryptocurrencies in the hours close to bankruptcy. Thus, if we compare what happened before from midnight UTC on November 6 to 5 p.m. UTC on November 8, 2022, with what happened after the bankruptcy from 6 p.m. UTC on November 8 to 11 p.m. UTC on November 12, 2022, we see how the hourly average volatility of all cryptocurrencies expressed in annual terms increased enormously, spreading from the FTT token crash and the growing fear and uncertainty regarding the FTX market. Therefore, the FTX bankruptcy may not have affected all cryptocurrencies equally. What's the effect of FTX collapse and bankruptcy on other investors? Investors are pulling record levels of bitcoins off cryptocurrency exchange platforms as the bankruptcy of Sam Bankman-Fried's FTX raises fears for the safety of its assets. Once the darling of the cryptocurrency industry, FTX filed for bankruptcy in mid-November after an $8 billion hole appeared in its balance sheet. The new chief executive John Ray said there was a lack of basic risk management, and Bankman-Fried has admitted deficiencies in internal controls. Its rapid decline has alarmed investors who hold and trade their assets on other centralized cryptocurrency exchanges, prompting record levels of withdrawals from Bitcoin, the most traded cryptocurrency. FTX went bankrupt with over 1 million potential creditors. Investors withdrew 91,363 Bitcoins last month, with a total value of close to $1.5 billion based on the average November price of about $16,400 from exchanges like Binance, Kraken, and Coinbase. This is the largest outflow of Bitcoins ever recorded, according to data from CryptoCompare. It is not clear if the cryptocurrencies are being sold or moved to private wallets. This hasty exit comes as the price of Bitcoin plummets, which has fallen 64% this year and is currently trading around $17,000. Withdrawals in October were also high, at 74,294 Bitcoins, as cryptocurrency traders withdrew their funds after a crisis-filled summer that included the bankruptcy of crypto assets lenders Celsius and Voyager Digital. Rival exchanges have been quick to distance their practices from the FTX chaos to calm clients' nerves and limit potential market contagion. However, the record outflows highlight investor mistrust of Bitcoin as the digital asset sector faces increased scrutiny from global regulators. In the first 7 days of December, 4,545 Bitcoins were withdrawn from exchanges, compared to 3,846 Bitcoins inflow in the same period last year, according to CryptoCompare. Indicative of the detrimental impact of the FTX collapse on its rivals, ratings revised down US-listed Coinbase bond rating in late November, where the growing likelihood of sustained declines in trading volumes and customer engagement to essential drivers of revenue. Falling crypto asset prices will restrict companies' ability to raise funds and depress customer demand. In addition, markedly lower crypto prices will deteriorate credit quality from centralized financial firms, while the Bitcoin sell-off slows. The damage has already been done. According to market experts' predictions, the pain for crypto investors will continue well into 2023. More and more cryptocurrency companies and exchanges are finding themselves with insufficient liquidity, leading to more bankruptcies and a collapse of investor confidence in digital assets. Is it time to regulate the crypto market? The convulsive situations of the cryptocurrency market has reopened the debate on the need to regulate this financial ecosystem characterized precisely by its deregulation. Cryptocurrencies such as stablecoins already have regulatory initiatives such as that of the International Organizations of Security Commissions. Other regulatory frameworks such as the European Union crypto asset markets are making progress in trying to regulate trading platforms. What lessons does the bankruptcy of FTX leave? The evidence suggests that the conventional profile of cryptocurrency differentiates them in their behavior. So, this distinction could be essential when advising investors on the management of their crypto portfolios. Now you have seen it all. What are your comments about this video? If you like this video, hit the like button and smash the bell icon for more notifications. And don't forget to subscribe to my channel to get more videos like this. Thank you, and we hope to see you in the next video.